Welcome back to Dukascopy TV. I'm Elaine Stenson and I'm joined in the studio now by our regular guest, Jean-François Owczarczak, who's Director with Management Joint Trust, Editor of FinGraphs. Jean-François, you're very welcome.
Hi, Elaine.
So it's Ben Bernanke's last speech this Wednesday at the Fed meeting, and we're likely to hear some more details about how the tapering plan is going to be put into place.
Yeah, well, Bernanke initiated the quantitative easing, and I think he wants to bring a closure to it before he leaves, or at least hint to a closure to it. And so we'll all be very anxious to see what he's going to have in store for us to actually put in place this quantitative easing. And on the back of this, last week, we had some bad numbers in manufacturing out of China,
yes,
which triggered a sell on emerging markets and incidentally also on general equity markets. And all this is in the perspective of these announcements by the Fed, because that's if the tapering is put in place and is and to some extent has a quite a structured plan. That also means probably less liquidity on emerging markets. And so that with the concern in China, with some pockets of problems in Turkey and Argentina, is triggering a sell-off at the moment on risk assets and sort of a flight to quality. Okay. Now, you could see it here, and we were toning on it last week. Gold was in a correction up, and we could see here that we are on hourly mosaic, so with a perspective over the next week or so. We have euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures, and 3 months 30-year bond, US bond futures. And so we thought there was a bit more to go. Well, we've fulfilled that last week. We're slowly coming towards a point where the first leg up, I want to say, on gold is coming towards exhaustion. Yes. I'd probably say the same thing on the 30-year Treasury here. And if we look through the different currencies, well, that comes a bit as a surprise because a tapering effect, etc., should be supportive for the dollar.
Yes.
But in essence, here we mostly see Europe reacting up. We've had some good numbers in Germany this morning. And at the moment, if we want to position ourselves on the hourlies, we would see that the trends that have been initiated last week over the last 2 weeks should continue over the next week or so. Now I want to scope out of this shorter term picture, yes, and go on to the dailies, and let's look at the dailies on the same mosaic. Okay. Well, from the beginning of this year, we told that we thought the trends that were in place late last year would continue to be in place earlier this year. Yes. We've seen an intermediate correction in them at the moment, and we believe it's not quite over yet, and there's probably another month or two to go. Now, you are also asking me, well, how am I going to change my mind, or what is going to make my mind change? Yes. And I really need to see an impulsive move being done here on the dailies, to call it. Basically, and if you look at the treasuries here, and we maybe focus on it first, the correction was initiated in the second quarter last year with T-bonds moving down all through 2013. It had been a negative trend on the dailies too, and we recently initiated a correction up, so a counter trend move. And in order to really call a reversal here that could last a few months to a few quarters, we would really need to go impulsive on the dailies. And as you see here, we'd really need to move back above 136.82. Okay. Now the way FinGraphs is structured is that we give a sense of the trend, but most importantly of the strength of this trend, of this trend. And so as long as the move is only corrective, you would still be respecting the previous trend, which was a downtrend here, and you can't really call a strong reversal yet. So the 136.82 on the 30-year Treasury bonds is going to be crucial here. Focusing on equity markets, we've been positive since September 2012, so yes, so more than pretty much a year and a half ago. We're slowly getting towards what could be expensive territory. Now I'm on the S&P future here. We could see that we're getting towards exhaustion. The targets have been fulfilled. Oscillator is in the red here. The envelopes are touching each other. Pretty much the same thing on the dailies here, with the oscillator even starting a reversal. Now, as said, we are not yet in a corrective zone here on the dailies, and so it's still much too early to call a reversal of the trend. And so in this respect, we will consider the current move as a correction in an uptrend, and this correction on the hourly still has maybe a week to go and a bit more potential.
Jean-François, thank you very much for joining us in the studio again today.
Thank you for having me.
And that's all we have time for now, but Jean-François will of course be back next week. Until then, bye for now.